started, guys. We were going to have this meeting in person, which I'm glad we didn't because we didn't know it was going to be cold and rainy.
Yeah.
And so our attendance would have been much smaller. Plus, we have agents all over. And Jennifer just joined us from Puerto Rico, but we have agents all over Orlando, Tampa, the East Coast, from Miami up to Jacksonville. We have agents from all over the place. So I want you guys to be able to touch all of them. I want to thank everybody for coming in today. You guys are going to get CE credits, and we're going to have presenting today Monica and John from Assured Partners, and they're going to be running the show for CE credits. Those of you who missed it, you're going to look in the chat and you will see Monica's email there. She's going to need, well, she'll explain to you what she needs on there. And you guys have a good time. It's insurance. It's exciting. And I'm going to turn it over to Monica and John now.
We'll make it exciting. Thank you so much, Ryan. Appreciate it. And just to clarify, you work with Eileen Brown, right? You've been working with her for a long time.
Yeah, she's one of our agents, actually. Yes.
Yeah, awesome. Well, we love her. She's now our sales manager, and she's amazing. She connected Ryan and I together, but your office has been working with us for a long time, so we appreciate that. Let me present this insurance. 1 second, guys. This, okay. Can everybody see the insurance one-on-one slide? Okay, perfect. So I'm just going to introduce John Tankersley. He's actually the brains behind this amazing class on insurance one-on-one. So he's going to go over just what's really relevant and what's happening now in 2021, 2022. So it's not going to be, you know, let's go over an insurance policy and every single coverage line by line. No, we're just going to give you the vital information to get you guys to closing and how to not let insurance screw that up. So with that being said, I do have to intro to say we do have Facebook and Instagram. So please follow us and like us, because we share a lot of great information, and we partner a lot with our realtors. So we would love to be able to work with you guys even more so than we are now. Before we get into me passing the baton over to John, I'm just going to go over a couple of the course objectives that he'll be going over today. So he's going to explain aluminum wiring and how it affects your insurance rates.
New info on that, guys.
Yes. Importance of proper electrical panels. Also concrete block versus frame, which is huge as well in the insurance world. We're also going to go over roofs and shingles, 4 points, wind mitigations, a couple of the coverages on home insurance, and then we will dive into sinkholes, flood, and I think that's about it. Yeah. So with that being said, this is Mr. John Tankersley.
Hi, gang.
I'm gonna move it over so you guys can see him.
What do I do when I hit this slide?
You just hit the next arrow.
This button?
Yeah.
Okay. Good morning, gang. Thanks for having us. As Monica said, this is not a class on a line by line about home insurance. I don't want everybody in tears. This is a course that Monica and I started teaching a few years ago. And it's all pertinent information for our real estate friends when they're in the field, whether they're on the buying or the listing side, as it pertains to the real estate transaction. And it's designed to give you folks information so that you can be proactive with an insurance solution, so it doesn't delay or screw up your closing. And there's new information that is not on the slides that I've got some notes. So if anybody wants to take notes, I'll tell you, hey, this is a time. We're actually going to start off with some things that we've just learned recently. I will share with you this. I've been selling insurance for 28 years. I started Tankersley Insurance Group in 2002, and then built it up with a partner, and we sold it in 2016. And I'm still working for the folks that bought our company. We're a personal lines operation, which means we really specialize in property insurance. And most of our business comes from our real estate and mortgage friends. So that's why we're here. Having said that, the property insurance market, it really started in 2020, and it has continued to where we are now. I'm here to cheer you up this morning as real estate friends. It's a dumpster fire. It's the worst it's ever been. There are more things that have to be in consideration when it comes to getting property insurance to close than there ever has been before. You used to pick up home insurance for your client the week of closing, or sometimes even just a few days before closing. That's no longer the case. And we're going to share with you some stuff right now that's not on the slides that you need to make some notes on. The first thing was be as early as you can. As soon as you enter the inspection period, start looking for insurance, whether you're on the buying or the listing side. And one thing I will share with you is that if you're on the listing side and you're taking a house and it's an older home and you know it's got some bumps and bruises, the best $150 to $200 that your client can spend to help sell the house, aside from your expertise and your knowledge, would be to have a 4-point and wind mitigation inspection done, because you, as the listing agent, a lot of agents don't know this, you can gift it to the buyer's agent, and they can use that to help obtain insurance. Plus, we get an insurance solution in place for you so that when people come in and they're looking at the house, whether it's a buyer's agent or it's an actual buyer, you can say, here is the insurance. This is what it's going to cost. So on the listing side, be proactive, just like on the buying side. On the inspections, we're going to talk about 4 points and wind mits, but here's something I want to share with you also. Don't send the full inspection, gang. Don't. It actually muddies the water, because then we got to look at, we have underwriters that have to look at, 30 or 40 pages of the leaky faucet and the doorknob that's loose. Don't do that. Just send us the 4-point and the wind mitt. Okay. Escrow holdbacks and after closing repairs and renovations. In the past, this is big, guys. In the past, and I just had an email this morning on it. Hey, we're closing on the 30th. We're going to get the roof replaced within 30 days of closing, or we're going to get the plumbing redone within 30 days of closing. In the past, we've been able to take that and have like a signed approved estimate from your client, or a commencement date, a start date from the contractor that's going to do it. And we could get insurance based on the future renovations. We can't do that anymore. We have to insure the property as is, get it to closing, and then when the renovations are done on whatever timetable after closing, your client calls us back and we endorse the policy. Okay. Number 3, you should probably add this to your seller's disclosure if you're not already asking this. When you're taking a listing, this is an important question that you should ask. Are you currently undergoing any homeowner's insurance claim with your current homeowner's insurance company? If the answer is yes, stop, drop, and roll, because if you're taking a listing and your client says yes to that, it is considered an open claim, and there will be no carrier that we represent or any insurance agent represents that will be able to bind coverage for the buyer's agent when the home has an open claim on it. They have to get that claim closed. We can walk your client through how to do that. And where do we see this most, gang? Mainly on roofs and electric. Mainly on roofs. They're in the process of working with the home insurance company or public adjuster or an attorney, and they're trying to get a roof put on the home. It's an open claim, and we can't get insurance for the buyers. It'd have to be a cash offer. That's what you guys would have to do, because insurance is going to be required for any deal that's got a mortgage on it. Is there any questions on that? Okay, cool.
I do. I'm sorry.
Oh, it's okay.
Sorry. What if the cash buyer wants to insure the home?
Can't get it.
Okay.
Good question.
What about the fire and hazard insurance? What about that minimal that investors will get? It's like fire.
DP1s and DP3s, same deal. Anything that's got an open claim on it, we won't be able to write any property insurance coverage on any form. Good question. So that claim's got to be closed. They got to get a letter from their current carrier saying that the claim is closed, and then we can start working for insurance. And we can walk your client through that, or you can call me or Monica on our cell phones, And we can talk you through how to do that.
Can you explain, and maybe you're going to get to this, but can you explain the difference between regular homeowners insurance and then that fire and hazard coverage?
Yeah, I can, and I'll get to it. Yeah.
Okay.
Because we're starting to use that more and more. And because let's be candid, your inventory, folks, is so low. There are houses that are you're involved in transactions with that probably would not have been on the market, or there would have been some maintenance done before they were on the market. And we're trying to get you to the closing table. So DP3s and DP1s, particularly for investor clients, it's different than homeowners insurance HO3. And it's just a less broad range of coverages. But yeah, I'll get to that. So Monica, is it?
Mhm.
Is it? Oh, we do this. Do I do this? Okay. Okay. So we're going to talk about the big three. This is the stuff that drives real estate agents nuts the most. The first is aluminum wiring, then Federal Pacific, and then polybutylene. Look at that guy. Is it going?
Keep going, press it again.
Okay. Okay. So what's the big deal with aluminum wiring? Well, the insurance companies are running from this more and more because of an increased fire hazard. And you can see the three reasons why there's an increased fire hazard there. All right. So there are less companies that will do this with aluminum wiring. And brand new information, please make a note, folks. Right now, as of yesterday evening, we are officially at a point with the carriers that we represent. And there's a bunch of them. We represent over 30. I think we have access to probably closer to 40 when you talk about excess and surplus lines. Unless the home has aluminum wiring with Alumicons, it's extremely difficult to insure. Does everybody know what Alumicons are? I'll take 60 seconds and go through it. Basically, what an Alumicon is, the insurance slang for it is pigtails. But what an Alumicon is an electrician replaces the aluminum wiring with an alternate material to the light sockets or the outlets as they go into the house. When we've got a house that's got Alumicons that are installed, the aluminum wiring, there are companies that will insure it and the premium is not as high. But for your inventory, where do you see aluminum wiring the most? Particularly older homes. It really starts in the 60s and goes up through the mid 80s on your inventory. 60s through probably the low to mid 80s. Another thing, and this is crucial when you're talking to your inspection contact, when it comes to the 4-point and the wind mitt, particularly the 4-point. If it's aluminum wiring and it's wrapped in cloth, tell your inspector, don't say wrapped in cloth wiring. Tell them, he or she, to be specific enough to say it's aluminum wiring, because we've gotten some 4-points back over the last 6 months that say cloth wiring. That's a whole different ball of wax when it comes to the underwriters on the insurance side. So even if the aluminum wiring is wrapped in cloth, please have your inspector notate aluminum wiring. It sounds crazy, but we've seen a bunch of 4-points that just say cloth wiring. It's nuts. That's something for you to know. So we got the inventory. We know why insurance companies don't like this, increased fire hazard. This is something that Monica put together for you as real estate agents to kind of have an idea on what things cost. Sorry for all our friends outside of Central Florida. And I'm happy you joined us. This is all pertinent information for you too. But is this for Florida or is this for just Central Florida?
I think it's Florida.
It's Florida.
She said there was one in Puerto Rico.
Okay, right. We have a lady from Puerto Rico that's joining us. I don't know what, this might not be pertinent for Puerto Rico, but what are you looking at on what Alumicons are going to cost? Guys, stay close to the $3,500 to $4,000 range, depending on the size of the home and the number of outlets. You see here, she's got the high end at $3,617. stay on that realm, okay? Because that's with the labor costs have gone up, supplies are down, demand is super high. Obviously, the environment we're in right now, we're advising our real estate agents, when you're calculating figures, stay closer to the $3,500 to $4,000 range. Okay. Once the home has Alumicons in it, we can insure it. Questions on that? Okay. The same church, but a different pew. We're going to talk about Federal Pacific Electric panels. It's the same deal with aluminum wiring. Insurance companies, again, less of them will insure it, and it does cost more. Probably about 25 to 30% more. Okay, about the same with aluminum wiring too, folks. Where do you see the Federal Pacific Electric panels in your inventory? You mainly see this in homes that have been built in the low to mid 80s, all the way up through the mid to late 90s. What's the reason for the insurance companies not liking these? It's because it's an increased fire hazard. You can see there that she's got 2,800 fires. That's nationally, that's not just Florida. They happen because electricity runs into the panel, it doesn't trip off properly, and there's an increased fire hazard, so insurance companies don't like that. Okay, replacement breaker typically cost, stay around $1,200. I know it says $800 to $1,500. On the high end, it can be $1,500, $1,600. Obviously, if there's multiple panels, it's going to be more expensive, but start at around $1,200. We're past the 800 marker. I know I'm just cheering you guys up all over the place. Oh, it's right.
Yeah.
There it is. Does everybody see the thing at the bottom? That's Monica with her economic data. Okay. Thank you for doing that. The other thing you need to know, and write this down, gang, there are other panels that get treated the same way. They're kind of like an evil twin brother. Challenger, Challenger. Zinsco, Zinsco. Sylvania, Sylvania. And you're saying, why is Sylvania in this mix? Because Sylvania went out and bought a bunch of Federal Pacific Electric panels. That's why they're in the mix. There's one other one which you may not see. I don't think you see it very often at all, unless you're dealing with clients that are in like a really rural area. It's called Bulldog. But the first three I mentioned are the ones that are most prevalent, that the insurance companies treat the same as Federal Pacific Electric panels. Okay. Can we write a property that's got a Federal Pacific Electric panel, get it to closing, and then have a panel switched out? The answer is yes, but there are very few companies that actually will do that now. We used to have probably 7 or 8 in our repertoire. Probably now you got Citizens and what, Monica, maybe 1 or 2 others. Okay, so it's getting tight. It's getting tight, gang. Okay.
Ask a question.
Yes.
This is Ida. Can it be closed with the condition or the
Can you close with the panel and then get it
replaced like within 30 days or something like that?
Yeah, and again, and this has been drilled into your heads by all the insurance folks, and you're always saying 30 days. The answer is yes, but there are very few companies. There are very few companies. We've probably got Citizens and 1 or 2 other options. We would love for the panel to be replaced prior to closing, but we know that doesn't always work out.
All right, thank you.
Yes, ma'am. Okay, we good on Federal Pacific Electric panels? Did I talk about inventory? Where you guys see this the most?
Yep, 80s.
Mid to late 80s up to the mid to late 90s is where it's most prevalent. Okay. So the first two are fire. This is water. Polybutylene plumbing. Everybody knows what this is, right? It's basically a type of plumbing material where as water runs through the pipes, particularly the joints, the pipes thin out and the joints thin out, and they have a much higher risk of internal water damage. And so a lot of insurance companies won't write a policy at all. We have some that will, okay, but that pool, no pun intended, is getting smaller. That's why you got to be super proactive, as I said at the beginning part of our program. There's the inventory right there, gang. 78 to 95 is where the polybutylene pipes live, okay? How do we insure them? We can get it to closing. What we do is we write a policy that will exclude or put a small sub-limit of coverage on water damage. This is typically slab leaks, pipe bursts, that kind of stuff. So there'll be a coverage restriction for your client, but they get into the house and they repipe it. Obviously, we endorse the current policy to reflect that coverage. The lender underwriters on the mortgage folks that you're using for your pre-quals and your loan apps, so far, this is not a big deal when it comes to their hazard insurance requirement. That's what they call it. But we do have coverage restrictions on internal water damage with homes with polybutylene plumbing. Where do you find this as real estate agents? Go straight to the kitchen sink, open up the cabinet underneath, and 9 times out of 10, if polybutylene lives in that house, that's where it's at. Okay. Another thing you need to know is real estate pros. It's an all or nothing thing when it comes to the polybutylene. If part of the house, no matter how small, has polybutylene and the rest of the house does not, it's got PEX, the insurance companies were still going to rate the house as if the whole house was polybutylene plumbing. Everybody gets what I'm saying? We're good? Okay.
Hey, John, question. This is
Yes,
like,
ma'am.
I'm gonna be your worst person today.
That's all right.
But I was told that by a plumber that did some work in my house. If you see that type of pipe under the sink, not to worry, because if it's not leaking and it's not leaking anywhere in the house, it's okay.
Well,
What is your take on that? Because I do have, my house is from 78.
so from an insurance perspective, if
It's
it's
73 is my house.
okay, well, so from an insurance perspective, the insurance carriers are just going to rate that whole house as if it's got polybutylene plumbing. Okay. There are people that live in homes that have polybutylene plumbing that live in them for 20 years, 30 years, and they never have a leak. The loss ratios that the insurance companies have, the data they have on the claims for water damage, all of them show significant increased chance of a water loss with homes that have polybutylene plumbing. But some homes may never have this issue that have poly, but what the insurance carriers have determined, and there's mountains and mountains of data that they go through, their loss ratios from the claims that get filed say that homes with polybutylene plumbing have a higher propensity for water loss. So
What I'm getting at, that not everybody with that type of plumbing will have to go and replace the whole house with pipe, correct? Because some insurance will just insure you, and there's the entire communities with this type of pipe approach.
So maybe, and that's a good point. And we don't have to look too far back to where this is not as big of an issue. If I was insuring a home that you folks referred me to one of your buyers 3 or 4 years ago, it was here, it was a thing, but it really wasn't going to prevent insurance from being put on the home. And the folks that have policies that they bought from the past with homes with polybutylene plumbing, the current insurance company, pardon me, the current insurance company may renew that policy year after year after year. On the newer stuff, on the newer real estate transactions for homes that have polybutylene plumbing, the game is different. There are fewer companies that will write it. Almost all of them exclude internal water damage, okay? Or they put a sublimit of like 10,000 on it. So if it's from the past, they can probably, as long as the insurance company keeps renewing the policy, you know, it's not broke, so don't try and fix it. On the newer transactions that have poly, this is where we're at.
Excuse me, I sold a home representing a buyer about 3-4 years ago. I can't remember exactly. And she was with an FHA loan and she was taking the down payment assistance program. And the home that she bought had poly pipes, and the lender came back saying that it needed to be replaced. So the seller graciously replaced it. And this was about 3 years ago, 3 years ago.
Okay, which is probably like 50 years for all of us, and like human and dog years over the last, because we've been through so much. But to your point, if the lender doesn't accept the hazard that the client's trying to get, I'm a little surprised on the FHA side. You mainly see that kind of stuff with VA and USDA. But if the lender comes back and said, this is an acceptable hazard, this has to be replaced so that we can write new insurance, our hands are tied. We got to do what the lender says. But that's a good point. How are we doing, guys? Are we ready to move forward? Okay. All right, section 2.
I'm going to interrupt you here because I didn't know what the next slide was.
Yeah.
I've been running into issues with lenders and insurers on galvanized pipe.
Yeah.
And water heaters over 10 years old.
Yeah, I'm going to get to the water heaters and the AC units. But George, you're right. There's a new line in the sand for water heaters and AC units.
What about galvanized piping?
So it's now starting to become more prevalent as an underwriting restriction for galvanized pipes. And typically those pipes, George, they're really old, most of them. Like you see it in College Park, Delaney Park, Thornton Park. And for our friends outside of Central Florida, it's the homes that have the historic homes or the typically older neighborhoods. The official ruling right now is we can get it insured. There are a couple of people who, some of these plumbers, and it's pretty ingenious what they're doing, is they're basically taking alternative plumbing material, putting it inside the galvanized, and then they inflate it, and it kind of acts like it's a big straw, and they put a smaller straw inside the galvanized pipes, and it's not horribly expensive. But right now, I can tell you that we do still have a market for galvanized pipes, but there are less companies that will do it. Good point.
What are those kind of pipes? I'm sorry.
They're the old, they're super old as a cast iron and galvanized steel, where typically it was a plumbing material in homes generally that were much older, homes in the 40s, 50s, some even in the 30s. And I think galvanized piping went all the way to, and you guys are in the field, you know this more, but I think galvanized pipes ran all the way up into your 60s in the inventory. So it's older homes that typically have this. And if you got one, whether you're on the buying or the listing side, call us. I know each case is unique to itself, but put galvanized right in there with polybutylene plumbing as raise your antenna up, get going on insurance early, get a proactive solution.
What about the copper plumbing?
Yolanda, copper,
Yes,
not an issue, not an issue.
not an issue. Thank you.
Yes, ma'am. Let's talk about block versus frame. Pretty common sense, right? Kind of like the old the old tale of the 3 little pigs, you know. Block versus frame. Here's the difference that you need to know. And I'm using very generic numbers because I want to make the math easy. Homes that have block construction or masonry veneer construction, as you'll see it on the appraisal, the inspection. If it's $1,000 with that for homeowners insurance for your client, if the home is wood frame, it's 40% higher. It's $1,400. And again, I'm using very generic math so we can follow. Expect your client to pay significantly more for insurance for homes that are classified as frame construction. That's number one. Number two, where does this cause nightmares for real estate agents? You guys know where I'm going with this. Your 2-story or multi-structure homes that you're doing. Here's the formula that you as real estate agents need to know. It's a 2-story house. The upstairs is a wood frame with stucco. The downstairs is concrete block or masonry veneer. If 33.3% of the living space is classified upstairs, the insurance companies are going to rate the entire house as frame construction, and you're going to have a much higher premium. Believe it or not, this trips up a couple of closings about every month when it comes to real estate agents and their clients. What the real estate agent does, and there's no fault in this, I'm just telling you how this usually happens. They give out our name and number and say, call these folks for insurance. They call us. We ask them if it's concrete block versus wood frame. They say concrete block. And in fact, the home is actually considered frame construction because it's oftentimes multi-story. And we release a rate to them. And then when it comes time to bind, we get the inspection or the appraisal. We get from you folks, or we get the appraisal from the mortgage company. And it says wood frame with stucco on the top and concrete block on the bottom. And the premium gets revised. And that can screw up a closing because you got debt to income ratios that the mortgage your mortgage contact is using to keep the loan qualified. And they've got an estimate of homeowners insurance on their cost estimate sheet. What I'm asking you as real estate agents to be proactive on is advise your client as early as you can. Hey, look, this is frame construction. Okay, this is not concrete block on your 2-story homes. If you know the formula for the heated living area or heated square footage or whatever the terminology that you folks use, advise your client. Tell the insurance people it's frame, because you want the accurate premiums so that you don't have any surprises prior to closing. This happens a couple of times a month, gang. We good? All right. Okay, let's talk about roof shapes. There are 2 basic types of roof shapes that we have to look at. The first is the main 2 are hip versus gable. As a real estate professional, you can probably drive down a street and go, hey, that's a hip roof, that's a gable roof, that's a hip roof, that's a gable roof. Okay, what you need to know as a real estate agent is hip roofs cost less to insure, significantly less, anywhere from 20 to 30% less. If it's a gable roof, your client's going to pay more for insurance. Okay. Flat roofs, let's talk about that. Flat roofs are very difficult to insure. There are very few companies that will insure flat roof. We can get it done, but the reason flat roofs are difficult to insure is because 6 months out of the year, what happens in Florida? It rains every day between 3 and 5 o'clock. And water gets on top of the house, on top of that flat roof, and it can't get off. So the insurance companies have more water claims on roof damage. So there are very few companies that will insure a flat roof. So if you've got a flat roof you're dealing with, whether you're on the buying or the listing side, get to us early so we can start working on a solution. Okay. Question on, we get this from realtors all the time. I got a gable roof or I got a hip roof, but I got an outdoor living area on the front or the back of the house that's got a flat roof. I got a big front porch, or I got a back porch or an outdoor living area that's covered by a flat roof. So far, not an issue with insurance companies. Did everybody understand what I just said? Okay. Let's get back to flat roofs for a second. The newer flat roofs, and this is going to sound like an oxymoron, it's going to sound like heavy air or jumbo shrimp. The newer flat roofs have a higher grade built into them, and so water gets off of those homes. So if you're dealing with a home, typically it's got a flat roof, and that home is 10 years or newer with a flat roof, it's got that new grade, and it's going to be easier to insure that. So knowing the age of the home on a flat roof is crucial off the bat. You mainly see the older flat roofs on the homes, 50s and 60s. We're good there? Okay. Okay, this is important, gang. You guys are going to see the main reasons why, what's the insurance company, why are insurance companies having a hard time? Why is it so hard to get insurance for my client? Why is the availability of insurance and gone down, and the price of insurance has gone up? Now, one thing I also want to note, please make a note. I meant to say it in the beginning part, kind of on my state of the market thing. Insurance rates in 2021 went up about 25 to 40%. They're going to go up again in 2022. All of the companies that we represent, or most of them that we represent, have already filed rate increases for 2022. So property insurance in general is going to cost your client more. The only segment of your inventory that has not gotten significantly impacted is the new construction segment. Homes that are typically 5 years and newer, this is not a major issue. They're not seeing the premium increases that the other sectors are. But you need to know that premiums went up in 2021, and they're going to go up again in 2022. Largely because of what the insurance industry has had to endure with regards to roof and roof claims. I'm going to share some stats with you. The reason property insurance market in Florida is so volatile and, kind of, I'm going to call it a dumpster fire. I think I said that earlier. In 2019, the Florida domestics, which is most of the insurance companies that insure most of your clients, they had a loss ratio of 127%, which meant for every dollar they took in, they paid out $1.27. That's bad math. And the underwriting loss on roof claims was $580 million. So they lost over $500 million on roof claims, and they paid out $1.27 to every dollar that they took in on premium. In 2020, the loss ratio went up to 141%, and the underwriting loss on roof claims in Florida, this is Florida for all of our friends outside of Central Florida, this is Florida, went to $1.7 billion. It tripled in one calendar year. And we don't have statistics for 2021 yet. We're likely not to get them until the end of the first quarter of this year. And Ryan, if you want me to share that with you, we're happy to do so. But it's probably going to be the same. Insurance companies are losing money because hundreds of thousands of Floridians are being solicited by roofing companies, public adjusters, and attorneys to go get their roof inspected so they can get insurance companies to pay for a new roof. And as homeowners, these people don't really know or understand what's happening. Now, having said that, let me also say this, and this is not a disclaimer, this is the truth. There are reputable roofing companies out there. There are public adjusters that play an important role in consumer advocacy. And there are attorneys that do a fine job of protecting their clients. But the reason we're in the mess we're in on the insurance side is because there is a cottage industry that has been built up for roofers predominantly that are soliciting home insurers, soliciting whole neighborhoods and whole zip codes to go get their roof replaced. I live in Winter Park. And for our folks outside of Central Florida, it's kind of it's an older neighborhood. I live in a neighborhood called Windsong, and most of the homes there are 30 years or older. Some of them are newer construction. They don't know that I'm an insurance salesman, but I get a letter almost every month from J.A. Edwards Roofing, and I'm naming them because they're sending the letter, okay? And that doesn't mean every roof that J.A. Edwards put on is done so, with a malicious intent. But it says, "Dear homeowner, we recently secured and completed a full insurance covered roof replacement by your neighbor at 1650 Oakhurst Avenue." This is an older letter. I've gotten 7 letters in the calendar year of 2021. I haven't gotten one this year. On March 6, 2021, the Winter Park Maitland area had a severe thunderstorm with damaging wind and hail. As a result, we found that many Winter Park homes experienced roof damage. Please call us. We will come out and do a full roof inspection and see if it can be covered by your home insurance company. They even have, in the alphabet soup here, they've even got a homeowner's insurance claims specialist. And it's got claim denied, ? Please call us, not a problem. Again, I'm not saying all roofing companies are bad, and I'm not saying this is all nefarious and it's a horrible deal. I'm not labeling everybody. But what I am saying, to be pragmatic and to be factual, is that the roofing situation with Florida has really why you guys are in the situation you're in. It's hurting the real estate business. It's hurting the real estate business. Okay. When is it going to get better? I spent a lot of time in Tallahassee up in 2021 talking to our folks in our PAC, the Florida Association of Independent Agents, also talking to a couple of the lower level staff members of the state legislature. We think that there could be some normalization in 2023, but it's going to be bumpy again. Pardon me. It's going to be bumpy again in 2022. Okay. It's not COVID. It's not wind or hurricane. It's roofs and water damage and water intrusion. Okay. Look at these materials. Your concrete clay tile, that used to be 30 to 35 years on the insurance side. They've dialed it back to 20 years. Look at your metal roofs. There used to be a radio commercial that came on that said roof for life, 40 to 50 years, metal roofs, 20 to 30 years now. 3-tab, which is most of your homes, particularly your tract homes, 10 to 15 years. And then you have your architectural shingles, which is, more shingles, more glue, longer nails than 3-tab, 15 to 20 years. The insurance carriers, largely in Florida, have dialed back all the years that are acceptable to them when it comes to getting insurance for your clients. Now, we insure homes with older roofs and original roofs all the time. The key to doing that is the real estate agent is proactive, no matter what side they're on, and they get the 4-point inspection and the wind mitigation inspection. And that's in our next section. But if we have a clean 4-point and wind mit, we insured a tile roof that was 34 years old the last week in Central Florida for $2,900 a year. So we can get it done, but it's a different hill to climb. It takes longer to get a quote, and there are fewer companies doing that. That's why you as real estate agents, you guys are really driving the bus. You really are. I know the mortgage loan officer and the loan processor are in contact with your client, the borrower, on loan conditions and things like that. But when it comes to being the genesis of let's not screw up the insurance, the real estate agent is playing a more crucial role than he or she has ever played. And I've been networking and engaging real estate and mortgage professionals since 1999. Okay. Monica, do you want to put the thing up about the roof certification? This is brand new information, gang. We didn't even have time to put it in a slide, but Monica's going to share it with you now. Can you guys see that? Somebody say yes.
Yes, we can see that.
Okay. It's the Citizens Property Insurance Company, and we'll email this to Ryan. And he can disseminate it so you guys can have this as an attachment on your phone or your computer so you can print out this form whenever you need it. This is the roof certification form, which is the normal standard form that Citizens Property Insurance Company uses. Why am I showing you this? This is what happens to our realtor friends. They're doesn't care which side you're on, buying or listing side, doesn't matter. There's a new roof on the home. Let's say the home was built in 2000 and there's a new roof that was put on in 2018. But you can't find a permit. You can't find a permit. Either it wasn't properly filed or somebody did the work without pulling a permit, whether they were licensed or unlicensed, but the roof condition is good and you know it's a newer roof, but you cannot find a permit. The real estate agent can provide this form to their roofing contact, and I'm sure all of you have become very close friends with your roofers and your inspection contacts these days because of the situation we're in. If you give him or her this form, they can fill it out and we can use that in lieu of a permit. Does everybody understand what I'm saying? This is a workaround. I'm a real estate agent. I can't find a permit. I know I got a newer roof. I need to get insurance to close. And I want the newer roof to be reflected in the premium. Now, not all roofing companies will do this. Some of them have their own roof certification form, and that's okay. It's totally fine. But this is a form that many roofers throughout Florida use, and most of them are pretty familiar with it. So you as a real estate professional, if you provide them this form, it'll be helpful. And it's a workaround. How do I take it off? Does everybody have any questions on that? And we'll get this to you. We'll get it to Ryan, or we'll get it to the transaction coordinator. We'll get it to someone. And that way you guys can all save it in your phone as an attachment, or you can have it on your desktop of your laptop or your computer.
I have a question.
Yeah.
In regards to that, is that something that home inspectors can do with the 4-point inspection to get a roof certification for it?
So if we've got a good 4-point, and that's usually what happens, is the 4-point, the inspector says, there's a new roof on here. And the life expectancy is good. It's 10 plus years or whatever it is. Or you got a client that they're not going to get a 4-point. This helps if they don't get a 4-point, but this also helps in lieu of or in conjunction with a 4-point. Good question. The more ammo you have to give the insurance companies, the insurance agents, the better.
I'm sorry, I get my, okay, so is that form only to be filled out by licensed contractors?
Yes.
For roofing specifically?
Yeah, the roofers. Yes.
Okay.
I'm sorry.
Thank you.
Yes, ma'am. Okay, we're getting to the 4-point section. As I said in the beginning part of the program, don't send us the full inspection, gang. The 2 inspections that are your friend to get to the closing table, to get insurance solutions, whether you're on the buying or the listing side, is the 4-point and the wind mitigation inspection. Here's the new line in the sand. Please make a note, write this down. On the 4-point, if the home is older than 15 years, or it's an original roof that's older than 15 years, the 4-point inspection is very crucial to give us the most availability and the most affordability for an insurance solution for your client. And as I said before, if you're on the listing side, you can advocate for your client to purchase these inspections. They've gone up in price. It's really now it's around $200. Depending on the size of the house, it can be as high as $250. But the inspectors know what they're doing. They've been doing a ton of these. And this is the best money they can spend. So you as the listing agent have an insurance solution, and you can gift it to the buyer's agent as well. If you're on the buying side, this is crucial for you to have, so that when you're plugging in numbers, there's no surprises on what insurance is going to cost. The 4-point covers the roof, the electrical, the plumbing, and the heating and air. Those are the 4 components. I think most of you already know this. Okay. 15 years or older is typically when the 4-point helps a great deal. Wind mitigation. Generally go ahead and get this done. Same deal. 15 years or older, and or you got a house that's built in 2008. For whatever reason, mom and dad put a new roof on in 2016. Could have been an insurance claim, could have been they just put on a new roof. Getting a wind mitigation inspection that reflects that newer roof significantly reduces the premium for the home insurance for your client. Everybody understand? Okay. Again, these are about $200 to $250 together. The inspectors know what to do. They oftentimes go ahead and do whatever they need to do when they're out doing the full inspection. And then you as the real estate agent tell them to carve out those inspections and send them to your client, who sends them to us. We have a lot of realtors who send us the 4-point and the wind mid as soon as they get it. Okay. But the 4-point and the wind mid have never played more of an important role or a crucial role. And you guys are driving the bus on this. You're really in charge of how this gets done. Okay. The average credit on a wind mitigation for Central Florida, it's about $200. Your client actually gets a discount when they get one of these. Generally, it's about $200. It's gone way down. It went from $270 down to about $200. But your client gets that benefit for 4 more subsequent years. So an analogy that you can use for your client is, look, you get one of these things, it's going to help you get insurance, it's going to save you money on insurance, and you're going to get the discount for another 4 years. So spend $200 to save $1,000. That's the analogy I always use for easy math. Those are the 3 main discounts. The inspectors, I'm sure all of you have good inspection contacts. If you don't, please email myself or Monica, and we can send you the people that we use, because we have about 80,000 customers in Florida. Those are the 3 things: roof to wall connection, roof deck attachment, and then the roof shape. And I talked about the hip versus gable earlier. Okay, George, here we go. You ready? More good news. AC units and water heaters. This just started in late 2021, like the second quarter of 2020, like the second quarter of 2020, something like that. Many of the companies that we insure your clients went out with this new underwriting guideline. If the AC unit is 20 years old or older, different hill to climb on insurance, more difficult to get, less companies will do it. 20 years or older on AC units. Water heaters, if the water heater is inside the home, like it's an attic or a utility room or a laundry room, if it's 14 years or older, insurance is going to be more of a challenge. Doesn't mean we can't get it, but there's going to be less companies that do it. If it's outside in the garage or on pavers, it's 20 years or older, just like the AC unit. And some of you may wonder, well, why is it 20 years if it's in the garage, but 14 years if it's in the laundry room? It's a different severity of claim. If the water heater has a water discharge in the garage, you're dealing with concrete floor or tile and drywall and baseboards. If it's inside the house, particularly if it's upstairs, there's all kinds of a different severity of claim. You got drywall, you got tile, you've got, you know, we've had situations where living rooms and kitchens have had to be replaced because of a water heater discharge. So there's just more stuff that's more expensive when it happens inside of a home versus outside.
What I've run up against is my latest one was 10 years, and I had one in the garage with the discharge outside. So theoretically, it would be no damage if it exploded, and one inside, and they treated them both the same. And they gave us 10, they gave the buyer 10 years. That was her, they passed inspection, everything was good, but they said, no, it's older than 10 years. Garage makes no difference.
Okay.
So I'm running up against that number, 10 years, and I've talked to other agents who are saying the same thing.
No, and that's a great point, George, and let me elaborate on that. So your captive companies, your national companies that write property that we all grew up with thinking about when we thought about insurance, your State Farms, your Allstates, your Farm Bureaus, your farmers to some degree, your USAAs, which is very prevalent, okay? They are not interested in writing property insurance in Florida. So they have dialed down these age restrictions even more. Monica and I, we are independent agents, so we have access to 30+ markets. And so the numbers that I'm giving you here reflect the underwriting that's acceptable to the carriers that we represent. But your client, if let's say you're on the buying side and your client had State Farm for a bunch of years, and you put a contract on a home, and they say, and you tell them, hey, we got to start getting insurance, and sooner the better. And your client says, yeah, I'll just call my State Farm lady or my State Farm guy. You need to tell them, look, you may have to start searching for quotes with independent agents, because the State Farm agents are not really interested in writing a home if the roof is 10 years or older. 10 years or older, okay? And funny story, I opened up Tankersley Insurance Group in 2001. It took my mom 3 years to switch to me because she had a State Farm agent. So there's a very loyal crowd. They go in and they pay their premiums and they get calendars and cookies. Just be aware, if your client's in with State Farm or USAA or Allstate, to some degree Allstate has broker capability, or Farm Bureau, the biggies, not really interested in property insurance in Florida. Here's something that actually affects real estate agents a bunch. And we're members of VAREP, the Veterans Association of Real Estate Professionals. We've done many presentations for them. They do a lot with VA loans and the lenders and things like that. A lot of them are insured with USAA. I'm here to tell you, USAA, the property insurance rates for Florida, if it's $2,000 with us, it's $4,000 with them. So you got to kind of lay the groundwork for the retired captain that you're representing, or the captain that's in, he or she's in the reserves and they use USAA. Please understand, great company, great exclusive club to be in. Not everybody can be in it. It's an awesome thing for our military veterans and service members and family members. But for property insurance, I'm just speaking for property insurance for Florida, for our real estate friends, it's going to be much more expensive for your client. Okay. So just kind of plant that seed. Okay. You may be looking elsewhere. Okay. So we got a little good news with all the bad this morning. There are some additional discounts that your clients can get. If the home has a monitored burglar and fire alarm like ADT or Brinks or Safe Touch or Sonatrol, those are the 4 biggies. They get a discount. That discount's actually gone up. It's between 8 and 10%. Real estate agents ask, hey, it's got ring. No discount for Ring unless it's connected to the monitored burglar and fire alarm. Watching someone steal a FedEx package off your front porch doesn't get them a discount. So you'll notice this has happened a lot with you when you're asking for insurance quotes for your clients. The insurance agent may ask you what the date of birth is of your clients. What insurance companies started doing a few years ago is they started running algorithms through people with certain birth dates. And what they discovered is people that are 50 years or older, and I just joined that club in January. I got my pre-AARP membership packet. If your client is 50 years or older, they get a discount on their home insurance. What they found is that loss ratios for experienced homeowners typically are lower, so they're willing to give a discount. If they live in a retirement community, like a 55 plus, like the Villages or something, they get another discount. And any gated or single entry community that you guys are transacting business in, they get another discount. So there's some discounts that crop up that can help the home insurance rate for your client. We good? All right. Okay. Everybody's good and cheered up right now, correct? You're like, God, why did I take this class?
Can you, this is George again, can you elaborate on the single entry system or?
Yeah, there doesn't have to be a guard there. It's just got to be single entry, one way in, one way out. If the guard's there, a little bit more of a discount. If there's not a guard there, no big deal. They still get
Okay,
it.
so but it's still got to be gated, right?
Yeah.
Okay.
Oh, no, hang on, Monica, stop me.
Sorry. So for the single entry, no, we typically will look at the aerial of the property when we're quoting. What's really beneficial for you guys is if it is a gated community, sometimes we can't see that from, the Google aerial. So it's just good if if you are trying to look for any additional discount to get your DTI down where you need it for your client, if they're, letting you know of that, then definitely the gated community, but single entry doesn't have to have a gate.
Thank you for the clarity. Sorry, George.
Just to confirm, the age, the birthday, is that with every insurance company, and it's just about making a call?
No, so for many, you're talking about the date of birth, Ida?
Correct, Ida.
Ida, sorry about that. So most insurance companies ask for it up front when we're starting to prepare a quote. If you don't have it as a real estate agent, we can still do the quote. And if they come back and they're 50 or older, then we can add that discount. But you'll see that most insurance agents are now asking for the date of birth of your client up front.
Thank you.
Okay, I want to talk about something that's important for you as real estate agents, and I want to talk, it affects Florida all over for all of our friends that are outside of Central Florida, specifically Tampa, Hernando, and Pasco. And do we have any friends from South Florida that are on the call? This affects them as well. And it's really all over. There's not, sinkhole is not prevalent as much in Jacksonville or Northeast Florida, but it's something to that every real estate agent should know. You're taking a listing. This should be on your seller's disclosure. Has the home ever had a sinkhole claim? If the answer is yes, say, well, it's really nice to meet you folks and have a great night. No, I'm kidding. I'm kidding. Got to inject a little humor here. As the real estate agent, you need to ask your client, where is the engineering report? I've seen real estate agents attach the engineering report to an MLS. I've even seen real estate agents, particularly our friends on the west coast of Florida, from Southwest Florida all the way up to Chapel Hill, St. Pete, and Hernando and Pasco counties, that will put it in the MLS, or they'll actually put it in the, we've seen it on Property Appraiser Online. It's really a cool thing. I think our agents, our friends on the West Coast are more dialed in on this, but we gotta have the engineering report if we're gonna get an insurance solution so this can close. Ask the client, do they have the engineering report? It's a traumatic thing to go through one of these claims, so oftentimes they do, and it's a big report. It's about 100 pages. When you have that, we have a big advantage on getting insurance, getting the ball rolling on insurance. If they don't have the report, who was your insurance agent? A lot of times they can go back to their agent, and the agent can contact the company and go through the claims history and get the report regenerated. If it was a direct writer and there wasn't an agent involved, who was the company? Many times they'll charge a fee to regenerate that report, but it's nominal. It's usually between $100 and $200. But you as the agent, as soon as you can get that report, the better we're going to be in terms of getting an insurance solution. I can tell you there is no insurance solution if we don't have an engineering report when you're involved in a transaction of a home that's had a sinkhole claim. Okay? If no report exists, you can't put your hands on one. The client has to hire an engineering company to come out, and those reports are very expensive, probably around $2,000 now to get one redone, reflecting that the sinkhole has been repaired. Okay. I teach another CE class, and I'm happy to come back and teach it for you folks anytime that you like. It's called How Not to Get Sued. It's errors and omissions exposure for individual realtors in the field. How everybody that has the best of intentions on selling this house ends up getting sued. And one of the sections of the course is stay in your lane, stick to expertise in real estate. I bring this up when we talk about sinkholes because as a real estate professional, you get asked to wear about 100 hats prior to closing, right? It's everything. Do not take it upon yourself to interpret an engineering report on a home that had a past sinkhole claim. This is a real life claim. It happened to one of our real estate agents down in, it was in Polk County. And for those of you who don't know, that's just southern central Florida. And they had an engineering report, and they asked, the client asked the agent, hey, what do you think? And the agent said, I think we're good. And they end up getting sued. Okay, so don't interpret the report. Get one, get it to us so we can get a solution in place for insurance. But if they ask you, what do you think? Tell them, I think I'm a real estate professional. I'm not an engineer. If we want to hire an engineer to interpret this report, that's fine. If you want to submit it to the insurance people, so they submit it to their underwriters, that's fine. But don't get in the middle of that, okay?
I recently had a deal that the inspector said the house was kind of sinking on one side. The garage was sinking because the gutter was draining, which is hard to believe that water draining from a gutter would cause the house to sink. It was a block home.
Right.
So we had one of the jack companies come out and get like 2 estimates.
Yep.
But then when I called an insurance guy, he told me that if they see that any ramrod company had jacked up the house, you will never get insurance on it.
By ramrod.
If they see a permit that was pulled and you try to, like if my people had bought the house and then after the fact, we'll actually have to disclose it now that you know that to the insurance.
Yeah.
He just basically said nobody's going to insure that house and you'll never get insurance on it.
So we're leading in right to my next comment when it comes to this section. There are very few companies that will insure homes that have had past sinkhole claims. We do have them, and we have worked it out where we've insured homes that have had past sinkhole claims. And what you're specifically talking about is earth movement, maybe not classified as a sinkhole.
Correct.
And you've got a company that comes in and they elevate the house. We've had very few instances where we've actually encountered this. What typically happens is the company that did the movement of the house, they issue a report that's very similar to a sinkhole report from an engineer. And it's been extremely difficult to find insurance. Your agent friend is correct, but there's an excess and surplus lines company out there that we have used in the past that will do that, but there's a lot of coverage restrictions and a limitations, and the premium is very expensive. So that is, I would say, most of what he or she is telling you is accurate, but we have found excess and surplus lines coverage through, it's a Lloyd's of London syndicate. But it's limited in coverage and it's more expensive. So that's a good point.
Yeah, we walked away. To me, it was too risky.
If you're on the buy side, keep going. That's my
Exactly.
as an insurance salesman, unless they are just made of money and it's a cash offer and they're selfish.
Correct. Yeah.
Okay, we're not in hurricane season right now, thank God. I'm a native Floridian. I hate hurricanes. I hate June through mid to late October and even into Halloween. All right. I've been selling insurance 28 years, so not a fan of the summertime in Florida. It's 1,000,000 degrees, 110% humidity, and hurricanes come. So we had a very active storm season the last couple of years. We've been very fortunate as the peninsula has been very fortunate that we didn't have a direct strike in 2021. But I think we still got to the Greek alphabet in terms of insurance. Well, maybe they expanded the other alphabet. They didn't go straight into the Greek alphabet. But I know in 2020, we had 30 named storms. I want to talk about hurricanes in terms of how this affects real estate agents in the field. Be vigilant with your clients during hurricane season. We can bind a policy for your client up to 30 days in advance of the closing. So if your lender's pretty sure on a closing date and you're pretty sure on a closing date, it's pretty rock solid. Please advocate to your client, say, not only get a quote, but I want you to bind the insurance with the insurance company as well. Let me tell you why. Once we bind that coverage, it cannot be rescinded. And you cannot have a closing delayed because of a hurricane that enters the quote unquote storm box and delays your closing. Because what happens now, gang, is, and I've been doing this for many, many years, it doesn't even have to be in the storm box anymore, and it doesn't even have to be a named storm. There are insurance companies that as soon as they think there's a storm that could impact Florida that's going to turn into a tropical storm or a hurricane, they stop binding coverage. They institute what's called statewide binding restrictions. And they say, for the state of Florida, we're not writing any new policies. Where this hurts insurance agents, where this hurts our real estate friends, doesn't matter which part of the state you're in. I'll use Central Florida as an analogy. The storm may not even impact your area of the state, but your client can't get insurance because they didn't bind it in time, and the insurance companies aren't going to start reinstituting binding or restoring binding restrictions until the storm passes 24 to 48 hours. And it absolutely can screw up one of your closings. It absolutely can. So during hurricane season, advise your clients, if you can get coverage bound as early as possible, get it done, because I don't want to have a quote and not a binder, and then a storm comes and we can't bind coverage and you can't close this Friday at 10. And sometimes,
don't they have to send a re-inspector or reappraisal out there or something?
that's the next thing I was going to say.
Yeah.
The only time a binder can be rescinded, and this happened with Hurricane Matthew and it happened with Hurricane Michael. Both of them were on each side of the coast. Michael was Gulf and Matthew was East Coast. Irma too, obviously. But if the lender orders a reinspection, insurance agents, we have to cancel the insurance flat as part of the Florida statute. That's the only other time when a binder can be rescinded. That's a great point. Thank you, Tammy. I just don't want you guys to get your closing screwed up because your client didn't tell the insurance agent to hit the bind button. because we see it every year during this time. Our real estate friends, our mortgage friends, they call up, they're in a panic. It's Tuesday, they're supposed to close on Friday, and there's a storm that's got a path, you know, the cone of uncertainty, which basically encompasses Florida, because they, you know, as it gets closer, they shrink the cone, and you can't get insurance, and your closing's delayed. So that's what I have to say about hurricanes. Okay, let's talk about flood insurance for a minute.
We do have a question.
Well, oh, we got a question. I'm sorry.
On flood though, so if you wanna, I
Go,
can ask.
go ahead.
We had Natalie and several others ask if we can get quotes for listings so we can tell buyers what flood insurance would cost.
Yes, you can. And our friends on the west coast of Florida, our real estate friends on the west coast, they're already doing this. In fact, some of the listing agents, when they put the listing in like a publication or a magazine for solicit, they'll have the flood insurance premium included with the listing. So you can do this. You absolutely can. On the listing side, it's crucial. What you need to know as a real estate agent is if it's in those 3 zones on the bottom there, A, AE, and AV, there's 100% chance that the lender underwriter that, you know, is going to do the loan is going to require flood insurance in conjunction with home insurance. And they call home insurance hazard insurance. They're going to require it. What can you do as a real estate agent to keep a flood issue from blowing up your transaction? We've been saying this all class long, and we're almost done, gang. We're doing great on time. We've been saying this all class long. Be proactive. We need an elevation certificate to calculate a flood insurance premium. Elevation certificate, not a flood zone determination. That just tells you what zone the property's in. We need an elevation certificate to get the best possible flood premium. How do you, as a real estate agent, how do you get that the fastest? You all have your favorite title partners that you deal with. You have leverage with your title partner. Your title partner has leverage with the survey company that does the survey and the elevation certificate. You call up your title partner and say, this is in a flood zone, and the mortgage people are actually really out in front of this a lot too. Many times the mortgage folks know right at the same time you do, or really close to it. You call up your title partner, say, we're going to need an elevation certificate. Please tell that survey company to do an elevation certificate when they do the survey for the out parcel or the lot. Okay. What happens if you're in a transaction where part of the out parcel or the land is in zone A or AE or AV, and the structure's in zones B, C, or X, which are low risk flood zones? Many times the lender will not require flood insurance if it's in those zones, actually all the time. How can we help you as an insurance agent in advising you? We take that flood zone determination, and we can do it on our end too. And we go to the flood underwriters and we say, there's a good chance that the lender is going to require flood insurance because part of the out parcel is in zone A or AV or AE. But we want you to give us preferred flood rates because the house is not in an A zone. And you see this a lot on certificates where it says A/X. You guys familiar with this? What that means most of the time is the home is in zone X, the out parcel's in A. We try to get the lowest possible premium for your client.
I have a in that regards.
I'm sorry?
I'm sorry, I said I have a question.
Yes, ma'am.
Is there a website, and I think there is somehow in the past, I was showing a home in St. Cloud that was across a lake, and it did have zone A on their zoning. So it needed flood insurance. The listing agent, and I wish I would have saved that. The listing agent sent me website to where he told me that we could go in and find the elevation certificate and retrieve it from there. We didn't end up proceeding with that, putting an offer on that house. The buyer didn't like it, but the listing agent, I remember, he was saying that there's a link that I could log on and retrieve the elevation certificate from there.
Right. I don't know that link name. Monica's taking notes now. If we could find out. I know if it's just and a lot of times it's in the MLS also, but if you're looking for a quick, what zone is it in? Not the elevation certificate, but what zone it's in, FEMA.gov. You plug in the address.
Yeah, it was definitely on his flood zone, on a flood.
Okay. All
So
right, but
we're
I
moving on.
let's try and find that
Because what happens is on the title, we could ask that to the title companies, but what I've been told from title companies, they don't get to the survey part of it in the transaction until later on the transaction, because normally they have to charge the buyer those type of fees.
right.
They leave it for last before, so that they can clear up all of the transaction conditions prior to getting to that point. And so that's why in talking with the listing agent, he mentioned that, and I looked it up and I couldn't find it. So I don't know if I wish I would have saved the link.
Yeah.
I don't know if I was doing something wrong, but I did not find it, or maybe it was in one.
Monica's making some notes too. We'll try to dig it up on our end, and there might be an insurance portal that we can go to. I'm unfamiliar with it, to be very candid and honest with you. I do know this: flood zones change or can potentially change about every 3 to 5 years with municipalities as it regards to the flood plains. And elevation certificates, unlike 4 points and wind mits, they're good as long as the zone hasn't changed. You can have an elevation certificate that you can dig up from years back, and we can use that to calculate flood insurance. That's something good for you real estate agents to know. There's a question that was asked at the beginning of the flood. Can the listing agent get an estimate on flood insurance prior to, so that, I talked about our friends on the West Coast that do that. The answer is yes. If they've got an elevation certificate, all the better. We have private flood companies that we have access to where we just need the address, and we can calculate a preliminary flood rate off of the address without an elevation certificate from a private flood insurance company. This is not FEMA. This is not the National Flood Insurance Program. It's a private flood company. I will tell you, to be candid, when we don't have an elevation certificate and we rate it with a private flood company, it is more expensive, sometimes significantly. The sharpest pencil we're going to have as insurance agents to help you get to closing is the elevation certificate. We okay, guys? All right. So let's talk about wind pools real quick. And we got agents from all over the state. Sometimes you'll be involved in a transaction where the home is close to the coast. It's usually within 1 to 5 miles. And some insurance companies, when you go refer your client to get insurance, some insurance agents will have companies that will not write a policy that includes wind coverage on the home. They'll write it for everything else, but they'll exclude wind coverage. Relax, don't worry. We can write a separate wind policy, kind of like flood. We can write a separate wind policy through Citizens that covers the wind portion of that home. Where are homes generally located where they may be quote unquote in the wind pool? It's proximity to coast. And I'm going to use the East Coast as just kind of some geographical markers in your mind where you, as a real estate agent, hey, this might be in a wind pool. If it's east of 95, decent chance it's in a wind pool. If it's east of US 1, very good chance it's in a wind pool. If it's east of A1A, it's in the wind pool. You're in the ocean. And yes, we insure the homes. Our agency insured some homes in the Barrier Islands and Merritt Island and South Florida. We insure homes in Key West. Okay, so we're pretty familiar with it. We know how to deal with it. On the West Coast, I used to use Tamiami as a kind of a line in the sand. We've gotten different information on that. Usually I'm going to say between 1 and 5 miles of proximity to the ocean, you may be dealing with a home that's going to have an insurance policy of wind coverage in addition to regular coverage. It's not a big deal, but just understand and know, look, this could raise the premiums more. People who buy those homes, typically they're not as price conscious anyway, because they're buying coastal property. Look at this. This guy took my class. Coverages and deductibles, the boring side of insurance. Everybody relax. We're going to talk about a coverage. There's 2 coverages that we talk about that have been brought to our attention by our real estate friends in the field. And they've come back to us and said, talk about these coverages because we get asked this from our out of town buyers. So there's 250,000 people a year. It's actually over 330,000 people moved to Florida last year from out of state. Typically, it's in this order: New York, New Jersey, Pennsylvania, Ohio, and California. Those are the top 5. You as real estate professionals have been dealing with more out of state buyers who've never bought property in Florida before, and they've never had to buy insurance. And so they ask you these coverages that I'm going to go over now. I'm going to tell you enough just to be, informed, but obviously kind of getting back to our how not to get sued, say the insurance agent will explain these coverages and answer your questions. But this is stuff that you guys get all the time that we're going to bring up. The first is the deductible. People buy a second house in Florida, or they're moving to Florida from another state. They've never had to deal with an insurance policy where there's 2 deductibles. Every policy that we sell in Florida has 2 deductibles. One is your all other peril deductible, which is everything but hurricane. It's fire, burglary, vandalism, random water discharge, lightning, tornado, hail. Those fall under AOP, all other peril. This is new information too. The average deductible for all other perils in Florida used to be about $1,000. It's now gone up to about $2,500. More and more agents are quoting $2,500 deductibles with their policies. Then you've got a hurricane deductible. It's typically 2% of what the coverage amount is. Not the damage amount, the coverage amount. So, do you guys want to play a game for a $20 Amazon card? This is where someone says yes. Ryan, are you on?
Yes.
Yes.
Yeah.
Yes, I'm on. I'm on now. That $20 card.
I'm going to make this all your fault. You ready? You're like, okay, great.
So the first to put in the chat.
It's the first to put in the chat.
First person to respond with the right answer.
Gets
in
a
the
$20
chat.
Amazon e-card emailed to them. George referred, I'll pick on George. George referred me a client, and we wrote a policy where $200,000 in coverage, and it has a 2% hurricane deductible. And then Hurricane Monica came through a couple of months after closing. There she is. And she did $100,000 of damage to George's client that got referred to us. George's client had a 2% hurricane deductible. What's the actual numerical value of the deductible? Go.
Oh, wow. Those just flooded in.
Oh, seriously?
It's the first right answer. We got 2,000.
Ryan, you just beat Natalie in terms of speed.
Oh, no. Somebody beat me. Daryl beat me. Somebody beat me.
Oh, Daryl, I'm sorry. Sorry, Daryl. Daryl's right. It's not 2,000. It's a percentage of the coverage amount, not the damage amount.
Coverage. Okay, so Daryl.
Oh, that's right.
Daryl one.
Daryl one, please email Monica.
I have your email.
Oh, she got it.
I'm notating it right now.
So don't
You guys thought he had a big head before.
Cool. What's the other coverage that we got a question on? It's weird, but you guys came back to us with this, so we're like, okay, we're gonna go ahead and explain this. Can they see the arrow when I?
You have to do like,
Oh, don't worry about it.
okay. You could probably highlight it. No,
Where
we're
is
gonna mess it up. Ordinance and law here.
Does everybody see ordinance and law coverage? Right?
Summary coverage.
Okay.
No, we see summary of coverages.
Yeah, go down to hang on, Monica's gonna fix it.
Okay, yes, we see that.
Sorry, I'm doing it with my left hand.
That was great, actually. Okay, so what is this? Because you guys got this question in the field. This is a coverage that we as insurance agents put on as an endorsement. It's a standard endorsement to your clients that you refer us their policies for homes that are typically older. And let's say I insure a home that's built in 1970. So it's 52 years old. And we cover that home for $300,000. And the home has a total loss, it burns to the ground. But the home is not obviously been built to current construction codes throughout the state. And it actually costs more than $300,000 to build that home back up to current construction code. This coverage protects your clients. It's like gap insurance on the little home insurance. It's like a little endorsement on your gap insurance, on your home insurance for gap insurance. And we got several realtors that asked that because they were referring as older homes, which we were able to insure, homes that are typically 40, 50 years old. And everybody that's on this call, you all can, Rolodex in your mind, all the neighborhoods. You got the hardwood floors, you got the fireplace with that's chipped and it's great, it's wonderful. But they're older. This is a coverage that goes along with the older homes. So those are the two coverages that you guys asked about. Those are the ones that we went over. Does anybody have any coverages or questions now? That's okay. Well, yeah. Hey, gang. Everybody look at this slide. It used to be that real estate agent would text me the address and say, hey, need insurance on this, we're closing next Friday. The game has changed. In order for us to get the most accurate quote with the most availability of companies that can quote it so that we can get the best price so that you can close on time and within the debt to income ratios of the pre-qualifying mortgage, these are the pieces of information that we need. The sooner we have them, the better. Name, date of birth, property address, current address, that's new. Date of birth and current address are new. Okay?
What if they live in a extended stay hotel till they're purchasing a home?
Their former, that's a great question. Their former residential address that they received mail at, other than a PO box. Yeah.
Okay.
Okay, another question. I was told that insurance companies are now pulling credit in order to give quotations and such.
Right.
So if a buyer's in the middle of a transaction and needs to get a quotation, would their credit be pulled?
So the answer is yes and no. And it's a great question. We get this a lot. So for the state of Florida, you cannot preclude your client from purchasing home insurance based on credit. Okay. So what many property insurance companies do is they do not pull credit. we issue a quote based on a non-credit rating. But there are a number of companies that if the client agrees to have their social included as part of the insurance score, not a FICO hit, gang, an insurance score. And their credit, their beacon is higher. They get an additional discount. So you can't be precluded from purchasing insurance based on a credit score. But your premium, your insurance rate can get a lot better if you have a good credit score. Here's the important thing to note, and this is super important when you're working with your lender partners. It's seen as an insurance score hit, a soft hit. It is not derogatory excessive credit checks as it pertains to them in their loan process. That is a great question. Malvis, am I saying that correctly?
Yes, you did.
Okay, that is a great question, but as real estate professionals, I see the memes on social media. They get pre-approved and then they go to Rooms to Go. We used to call the Rooms to Go credit card the no close credit card, where they go out and they buy a new car or they buy, furniture or something, and you got the realtor with their hair on fire. Okay, not the same thing. Doesn't affect your client, but a great question.
Yeah, the reason why I ask is because I'm in the process of refinancing my mortgage, and the loan officer that is assigned to my case told me, because my insurance actually went up this year. So I still have a policy, but I was thinking of looking for another quotation. So I'll see this. And he told me not to look for a quotation until after I close on my refinancing because they might pull my credit.
No, I understand. And we get that from our lender friends as well. And we have to explain to them, it's an insurance score. It's not a FICO score, and it's a soft hit. It's not a direct a check of credit that could be derogatory or excessive credit checks. But I get it.
Hey, John, don't you need also the square footage of the house amongst the information that you need for a quote?
Yeah, so the property address that you guys are involved in, generally we're able to pull it up on Property Appraiser online, and we can get all the physical stuff.
All right, thank you.
Yeah.
Are there more than one assured partners, like a franchise?
So that's a great question too. So assured partners, many of our friends in Central Florida still recognize us as Florida Insurance Specialists, because I switched the name Tankersley Insurance Group to FIS in 2005. Assured Partners is a gigantic insurance brokerage. It's a national insurance brokerage. And I sold FIS to them in 2016. They have over 300 offices nationwide, and they have 9 regions throughout the country, and they insure everything. They're like the Death Star of insurance. They suck up, they insure airplanes, oil and gas insurance, excavation insurance, you name it, they insure it. So they've got offices all over Florida, and they've got offices all over the country, and they even have offices in the UK and in Canada. So if you run into an Assured Partners ad or an insurance agency, they may not sell home insurance. They may be a commercial agency. But if you run it, so if you need clarity on that, you can always reach out to me. But everybody always thinks of Monica and I and the history that we've had, because the agency's been around since 2001, as FIS, Florida Insurance Specialist. And we do the same thing we did prior to selling to AP. We do the exact same thing. We've got more bullets and more ammo because we've got more national, we've got more regional contracts to add. So it actually helps us. So great question.
I think we're.
Hey gang, we're done. Look at this last slide. If everybody wants to be like, who won the thing? Daryl. Congrats, Daryl. This is an online link that you can use to submit quote requests online to us. And doesn't matter if you're on the buying or the listing side, we don't care. If you go to that link and input the information, it's follow the bouncing ball for a quote. You can attach 4-point and wind mitigation inspections. You can attach other documents that you want. You can attach the MLS. But if you go to this link and website and input the information, just for giving us the opportunity to quote your client, again, whether you're on the buying or the listing side, you get a little $10 Amazon gift card. And if you pile a bunch of them up, you can buy groceries or buy wine. Booze is very important to our real estate and mortgage friends, as well as the insurance people. Little comic relief there, but there's that's a neat little way for us to reward you folks as agents for working with us. We really invite you to work with us. We work statewide. For all our friends on this call, I'm teaching a class in South Florida very soon, and I'm going to be in Venice, Florida, in early February. All the carriers that we represent encompass the entire state of Florida, and we even have homes that we insure down in Key West. So from the Panhandle down to Key West, we got you covered. Just choose Monica or John, and we will get an agent to work on the quote for you right away. Oh, Monica's got something. Monica wants to add something. Sorry.
No, I'm gonna.
I have a question. Yeah, regarding this referring, do we need to put the client's name in there or our name?
So there'll be a section in there where you put your client's name, and then there'll be the referrer section where you put your name. It's very easy to follow. And if you're logging onto it the first time, and you're like, and you're like, hey, I need some help with this, call Monica or myself.
It's very simple. The only
Yeah,
thing I will
very
make
easy.
sure that you know is that we are in the Lake Mary office, because we do have multiple offices like John was explaining. So just make sure you choose Lake Mary, and then our names will populate. You can choose myself or John.
Yeah.
And then I just wanted to mention, I have 18 emails from everyone. I think we have more than 18 present in.
We got 35. Oh, that's chat. We got 35 participants.
Yes, so it looks like we're missing almost half of your license and addresses and name. So please make sure to email me so that I can get those credits submitted over within about a week or two. You should have an email which will confirm that you received your 2 credits. So please do not forget, because once we leave, I will not have your information, so you will not get the credits, and I want to make sure everybody does.
Yeah, once we log off, the registration's done. I want you guys, and March and September are big CE months for you folks. Please email Monica so you get CEs. I know this is a fabulous class, and I'm so awesome, and this is all such great, wonderful information, but my God, please get the CE credits. Right.
You guys, please, sorry, can you have put your contact information in the chat? I don't know if it's been there already.
Yep, I put my email. I also put both of our phone numbers in there, and I plan to email everybody just the slide presentation with the citizens roof certificate. So you guys will have all of our contact information as well. And hopefully Ryan has that, and we've been chit-chatting back and forth over the last few weeks. But I was gonna say, just also, again, follow us on Facebook and Instagram, because we do post a lot of, what's now and what's happening in the market of 2022 and the upcoming years. So we'd love to see your guys's adventures as well.
Our whole job is to be a resource for our mortgage friends and real estate friends, so you can get to closing. It's never been bumpier. You guys work too hard on every transaction. I don't want to file to fall out of a pipeline because of stupid insurance. We want to help you guys get to the closing table. And Ryan, we teach the how not to get sued class. Just circle back with Monica. We'll do it Zoom, we'll do it in person, we'll do whatever. We really appreciate you guys having us on today. Ryan, do you have anything you wanted to finish up with the gang?
No, guys. Yeah, I want to thank you. First of all, thank you guys for coming in. Presentation was awesome as far as insurance presentations can go. So we appreciate you guys. No, I really appreciate you guys keeping it interesting. But yeah, we have seen. I can tell you guys, John and Monica, I'm the one who takes all the complaints and the sad stories from the agents when things fall apart. And lately, it's been a lot of insurance issues. insurance, as you guys, I'm not telling you guys anything, I'm telling the agents here, but they've been cracking down on roof age and all the things that he just went through. And it's been squashing some of your deals and delaying them and losing deposits and doing all kinds of stuff because they couldn't get insurance on time or couldn't get it done. And what they're saying here about contacting them early in the deal has never been more important than it is right now. And you guys need to get started on that stuff as soon as you get a listing or as soon as you get a buyer, a contract signed. So guys, you're professionals. This is what you do. You handle this kind of stuff so the consumer never even sees that this is an issue. And I know you don't get thanked for that kind of stuff. You get thanked more if you procrastinate to the last minute and save the deal, but you're also risking the deal if you do that. So I just went through the home buying process myself and went through several insurance quotes and stuff like that. And it's not fun out there. So you guys, please follow them on Facebook, follow them, get them involved early in your deals, guys. And everything that they just said was awesome. I really appreciate you guys coming in, and don't procrastinate on your CE credits. And we will have you guys again in the next 6 months or so if you guys want to do that.
You just let us know when.
All right. Thanks, Monica. Thanks, John. It's been a pleasure. Everybody get signed up if you want your 2 hours. Otherwise, you just learned a lot. Anyway, thank you guys.
Thank
Appreciate
you so
it.
much.
You bet. Take care, everybody. Oh, make me the before you guys go, make me the host again, please.
Oh, yeah.
Otherwise, I'll never get out of here.
Yes. And you know what? Give me a second. How did you do
You
that?
have to click on the 3 dots on my name.
Oh, on your name. There we go.
And make host will be one of the things.
There we go. All right. And let's see if I can stop sharing as well. So I don't. Did that work for you, Ryan?
I don't see anything yet, but you got to probably stop screen share. You got to roll over screen share and then stop. Yep, now it worked. Thank you, guys. Appreciate it very much. Guys, if FRI agents, if you guys have any questions or anything you want to talk about, we've got a few minutes here. Thank you, guys. All right. Awesome. You guys have anything that you want to talk about?
Ryan, I'll catch you offline, but in general, we talked commercial a while back. Do you review contracts?
I can review contracts. It depends on what it is. George, typically you want to have an attorney do that. If it's drawn by an attorney, it needs to be.
Nishad's going to write the contract.
Well, I'm not going to review Nishad's contract. He's an attorney.
Okay.
So,
Well, but he's an attorney. I need some commercial real estate advice, or just in a
okay.
second.
Well, I'll take a look at it, but I'm not gonna make any recommended changes unless it's terms type stuff. So yeah,
Right.
I'll be happy to look at it.
Appreciate it.
You bet. Any other questions or comments? All right, guys, everybody enjoy the presentation. Give me a nod if you did. Hopefully you learned something.
Amazing.
Good. These have been squashing your deals, and you worked too hard to have your deals squashed, or even make you look bad at the last minute because you didn't get everything done on time. So it is
The high insurance premium affects their loan, their payment, that they may not qualify after that.
Yes, and I'd like to give a very unqualified opinion. Something I heard very recently is that they're going to start, the government is getting involved with forcing insurance companies to do rates and stuff like that. And that is going to make people back out of the state or back out of the business altogether. So it's going to keep changing. It's going to keep getting tougher and tougher out there and changing. So pay attention to what's going on with all this stuff. And it's part of your job being a professional. So thank you guys all for coming. Get your 2 hours, and be sure to contact Monica. Follow them on their social media. Do whatever you need to do. But this is part of building a team, guys. And if you don't, I know a lot of you guys, you have your favorite title people and your favorite lenders and your favorite this and that. A lot of you don't have your favorite insurance people. But that was very nice of them to come in today. And it's all about service when you're dealing with these insurance types. They're going to get you the same companies to bid on everything. It's all about service. And what they were saying, getting that stuff done early, get your customers to get the home security systems and do all that kind of stuff to save them money as well. Educate them on that, all that. All right. Thank you, guys. We'll see you next week with another awesome presentation of some sort.
Are we going to the office? Is next week? the
Oh, next week,
office?
yes. Yes, I'm sorry. We're gonna be at the office. We're gonna be at the office, and we're excited to have you guys at the office next week at 3451 Technological Avenue, the one near UCF. We will try to do some sort of
I thought,
sharing of that as well.
I thought what's her name? Romina was gonna help us with like videoing or something. Was that what
She
we were
is.
doing? Yeah,
She is.
okay.
Yep. But we're going to talk about all kinds of stuff. But yes, it's going to center around your social media and how to improve your performance there. So
So what is next Wednesday, Ryan?
what is next Wednesday?
Yeah, why we are coming to the office? I'm just sorry if I missed
You
anything.
don't have to. It's just for it's for our open forum, but we're having an in-person presentation. Not an official presentation. One of our agents is going to teach us how she does the social media videos, etc.
What is the time?
Same as always, 10:30.
Okay, thank
Is
you.
it going to be Zoomed at all or only in person?
Daryl, I'm going to work on that, buddy. I'm going to
Okay.
work on see what we can do, if we can record it and at least bits and pieces of it and put it on our YouTube.
Okay, cool.
I don't think it'll be a live Zoom, but I think we can record it and put it on our YouTube. Okay.
Okay, cool.
But
Thanks.
it might be live Zoom. We'll figure out what we can do. Emily and I will work on it.
Okay, thank you.
All right, guys, be sure to email her if you want that, if you want those credits. Should have already done it. All right.
Thank you.
Bye, everybody. See you next week.